a registered investment advisor firm serving clients throughout the United States. The clarity for your path forward starts now. Here is KPP Financial President, Financial Advisor, Steve Peasley.
Good afternoon, everybody, and welcome to InvestTalk. It is Friday, September 8th, 2023. I'm Steve Peasley, and on this program podcast, I will be providing useful data and unbiased perspectives, if I can. I think I can with my over 50 years of investing experience. And my objective is, as I've told you many times before, is to educate. So I will make a mixture of the questions you ask and the available data I have in front of me and come up with some kind of actionable material that you can act on if you wish. And of course, your contributions are the key. We need your questions to drive the show. You can drive any direction you want, as long as it's financial. So before I talk about the market's performance and stuff like that, let's go ahead and listen to our first caller question.
Hi, this is a great show. I just have one question regarding energy transfer stock, ET. What are the prospects of buying this stock for future? Thank you so much. I will really appreciate your input. Thank you.
Okay, this is Energy Transfer. It's ET as the symbol, engaged in natural gas, midstream, and liquid transportation and storage businesses in the United States. It's a fairly good-sized company, $43 billion. That's big. And it has a very erratic history of earnings. That's why it's not very expensive. I mean, the forward PE is only 10. It's a $13.76 stock. It's going to make $1.42 next year. Cash flow is pretty strong at $2.88, and it pays a nice dividend of 9%. So you buy these companies because of the dividend, not for capital appreciation. They're pretty strong. Management owns 12%, and mutual funds have been selling off recently. But long term, as long as you are focused on your dividend and not on making a lot of capital gains, the highest the stock has ever been is 20. So here it is at 1376. So that was in 2017. It's never reached 20 before since then. So, but it's a good company, good solid company. Okay, ET, Energy Transfer. Okay, we got a lot of ground to cover in the next 45 minutes. Here's what I have planned for today. My focus point looks at the story behind the question, can investors make sense out of the microchip sector? You know it's done very, very, very well. Will it continue to do very well? I also have a bunch of other stuff I want to talk about. The Federal Reserve has given us some hints of what direction they're going to take. Now, this is the Federal Reserve in New York I'm talking about. So, they don't say there's the Federal Reserve president. These various presidents of these 12 regions, they don't just say things. They make sure they're very careful of what they say, so we want to pay attention. Is the labor market weakening? You have pretty good unemployment claims every week. You have pretty low unemployment period. Is there anything indicating that it's weakening? And we'll go over that today. And companies that will face much larger problems in China. Our companies, not besides Apple. Apple, as I talked about yesterday, but there's other companies too that are going to face some pretty stiff headwinds in China, and I want to go over some names for you. So that's what we have on the plate today. The market itself was up. It was 76 points on the Dow, 13 points on the Nasdaq, and 6 points on the S&P 500. So the market was up today. Yesterday it was mixed. So it hasn't broken down yet. It hasn't got very strong either. So, we don't know but where it's going to go. Really, we don't. Okay, and also voice bank questions coming in. We got a call about Disney. He wants someone talking to me, want me to answer some questions. And then Cartier's Inc. I'll talk about that too. And since it's Friday, I'll share highlights from the newsletter, the KPP Premium newsletter. That's coming up at the halfway point of the podcast. Now let's talk about the market performance again real quick. The market has been mixed. They had a bad month last month, And it's mixed so far here in the first 8 days, really, of this month. So I think September, and September historically is the worst month of the year. So we're just going to have to be very, very careful going forward here. So just pay attention. Now, have you heard about the InvestTalk Classroom series we've been putting together? It's streaming right now. It's free on YouTube channel. The topic for episode 5 is how to invest in recessionary times. It explores the question, what is a recession as compared with financial crisis? And Justin Klein explains why it's important to investors to not paint every recession with this broad brush. Search InvestTalk Classroom, everybody. Now, my phone lines are open. We're waiting for your calls, 888-99-CHART.
When listener questions are played on the InvestTalk podcast,
how do you guys determine a value stock?
The caller voices are amplified many thousands of times.
Just wanted to get your opinion on JP Morgan and BAC.
How do you see this looking forward?
I'm 25 years old and have a question about retirement funds.
And the unbiased answers from Justin Klein.
That's why it's trading so cheap, because there's a lot of regulatory risk.
And Steve Peasley.
I kind of like it here. If I was going to buy Tyson Foods, this is where I'd buy it.
Benefit the entire InvestTalk community.
Thank you for what you guys do.
That's why 24/7, rain or shine, no matter how simple or how complex, your questions make a difference.
Symbol BKE. What's your outlook?
And InvestTalk is made better by the power of you. So don't forget to call 888-99-CHART. Everybody wants a secure financial future, but getting there takes strategy, discipline, and the right information. Steve Peasley is ready to provide his unbiased answers. So don't forget to call InvestTalk, 888-99-CHART.
888-992-4278. My focus point, can investors make sense out of the microchip sector? Semiconductor stocks are no stranger to boom and bust periods. We know that. The chip stocks, and they're very sensitive to boom and bust. So the question is the boom done? Are we waiting for the bust? Or maybe the boom going forward is not done. Maybe we still got more to run. No one really knows, and I can't really tell you. But, there's things we can discuss about that. Okay? For instance, what's driving this boom in the chip sector, not only government spending, but mostly AI, artificial intelligence. Everybody wants to get into AR, NVIDIA, AMD. Everybody wants to get into artificial intelligence because I think that's where the future is, and I don't think they're wrong. So they've been pushing, a lot of money is pushing into that field. A lot of the IPOs this last year were regarding artificial intelligence startups. So, it's been very hot, this sector, very hot. Now, I always get nervous when a sector gets hot, because after it's been hot, it cools down. My problem is I can never, ever, ever guess at the top, and that's really what you're doing. You're guessing at the top. I can't tell you this is the top or not. I can tell you there's going to be a lot more money put into this area. I think you should be part of it at some point. I just don't like to chase stocks and chase performance. The excitement will wear off at some point, but just because the excitement wear off and the stocks might fall doesn't mean they're not good investments. I think that's a good time to invest. But it's hard to be patient with these kinds of things. It's very difficult. Microsoft is pretty big into it with NVIDIA, so Microsoft is looking to monetize it as well, just like NVIDIA. In other words, start to make some money off of it. So we'll see if, there's a lot of FOMO going on, fear of missing out. People think they're going to miss it, and that's what continues the drive for these stocks. But are they going to really miss it? See, to me, the market is like a wave. There's always something behind. There's always another wave right behind it somewhere. And I like to buy things when they're at the trough of the wave, not at the peak of the wave. Broadcom is going to be involved. There's going to be a lot of stocks that are going to be winners here. What is going to be the winner? Don't know. Because usually one or two or three are the ones that come out ahead. And of course, Apple, Microsoft, NVIDIA, they're all trying to be those one or two or three companies. You know that. Okay, let's keep moving and pivot back to the InvestTalk podcast, Voice Bank, for a call that came in earlier, 888-99-CHART.
Hi, Steve, Justin. My name is Andy from South Florida. I had a question. I am an owner of Disney. I've been purchasing it for a few months. My cost basis is about 83, 84. I know it's come down and there's a lot of pressure on the stock. Do I continue purchasing or just wait patiently for the stock to rebound? I know there's some geopolitical pressure on it with all the stuff that's going on with Disney. I would really like your thought. Thanks for all your help on the show. I'll listen to your answer. Thank you.
Well, Disney is a pretty strong company, $150 billion in size. And yes, there are a lot of political pressures on Disney right now. But long term, I don't think Disney is going to be in that big of trouble. I mean, there's three major drivers of earnings for Disney. The theme parks, television and movies. And, those things are going to continue to have high demand. So I don't see it being a crushing thing for Disney. Their forward PE is now 16, and the 5-year range is 14 to 252. The reason why it's so big is because of 2002, But looking forward, that's a pretty reasonable price. $81.58 for Disney is pretty reasonable. The thing I don't like about Disney, they're so big, but they don't pay a dividend. One of the reasons why I don't own it, because I like a dividend. Their cash flow is very strong. There's absolutely no reason for them not to pay a dividend. They just choose not to. Fine. Well, I choose not to own it because of that. They will rebound, And I think the stock itself is probably worth more close to the $100 level than the $81 that they're sitting on right now. Okay, thanks for the call. Appreciate it. On Fridays, I generally would take time to fit in a quick rundown on the key benchmarks. So let's hit some of those right now. The 2-year Treasury, 4.96%. 4.96. The 10-year, for perspective, the 10-year is 4.25. So it's like 700 basis points below the 2-year. That's an inverted yield curve. That's usually not a healthy sign for the economy. So far, we've had this inverted yield curve for well over a year and a half. It hasn't caused a recession yet or predicted a recession yet. And just so you know, remember, 2-year Treasury is paying 0.64% a year and 3 quarters ago. And the 10-year Treasury, about the same time, was paying 1.7, a normal yield curve where the 2-year pays less than the 10-year. So, something to think about. Gold was priced at $1,920 an ounce. Hasn't really changed much. I mean, it's been that for a while. Nothing exciting about gold. It is a storage of wealth, and usually people run to gold when there's a lot of fear about. I just don't think there's a lot of fear about yet. So, I don't know. I am not a big gold person, even though I have some interest in metals that we own in some of our managed accounts, but it's one of my least favorite long-term holds, least favorites, because it's just gold. It's valued by whatever the price of gold is, Anyways, they can't grow it. They got to mine it. They got to find it. It's expensive. They're different things. Oil was selling $87.37 a barrel. A couple of years ago, it was $66 a barrel, and now it's $87. And OPEC is still cutting production. It increased its deadline. It's not going to cut. It's going to keep cutting production. That's going to put pressure on oil up. And if the economy starts to recover, oil's going up, everybody. up. For comparison, in Nevada, for gasoline, it's $4.59 when you compare that with us here in California, $5.34, and Louisiana, $3.34. It's pretty sad. It's just sad. We're going to take a quick break, everybody. Please remember that you can call anytime and leave your questions on the InvestTalk voice bank. And if you're listening live, at least live streaming, or if it's only on AM 1220, that's fine, radio out of Silicon Valley, you can listen now. 888-99-CHART.
Now, each time I host the InvestTalk podcast, I have the satisfaction of taking caller questions and then breaking down the often complex dynamics involved. If you've never called, don't hold back. You can leave your InvestTalk questions on the 24/7 Anytime Listener line at 888-99-CHART.
I just wanted to get you guys' opinion on a stock. I'm looking at Carter's Children's and Baby Clothes Company. I just wanted to know the long-term outlook on it, and what would be a good price to get in and hold for, maybe 5 years or so. Thanks. I appreciate you guys helping. I'll keep listening to the show. Thanks.
Okay, Carter's, its symbol is CRI, markets baby and young children's apparel in the U.S. under the name Carter's and Oshkosh and Bigosh brands. Anyways, they're going to make $5.90 next year, then $6.29 the year after. So the forward P is 11. The stock is at $65.59 right now. Return on equity is very good at 31%. Cash flow is strong. They pay a nice dividend of 4.6%, which should not be a problem for them to continue to do so. The only negative is their sales in the last 6 quarters in a row have fallen. And I don't like that. The stock has fallen too because of it. But it looks like it's trying to find support around $60, $61, $62, and here it is $65. So if it goes back down there and bounces again, maybe that'll show us that it's working, that it has hit a bottom. But right now we have lower lows and lower highs on this price over the last year. So I think you got to be really, really careful. I don't think this is the time to buy yet. I don't. 888-99-CHART is our number, everybody. The Fed policymakers appear to signal they could hold rates, in other words, not hike the rates, interest rates, for 2023 at the level that it's at right now. In other words, who hinted that? Well, it was the Bank Federal Reserve out of New York, John Williams. He said rates are in a good place, meaning to us, anybody's listening, because you have to, they tend not to tell you the whole truth. They just kind of feed you bits and pieces. He's trying to tell us, I think, that they probably are not going to raise rates unless something strikingly happens in inflation before the end of the year. Just before the end of the year. It didn't say anything about next year. So, and there's more than one Fed. So when you see them giving speeches, that's when you want to pay attention to what they're saying in those speeches, because they do kind of support each other in their thinking. So you want to see if that's true in this case. Okay, 888-99-CHART, 888-992-4278. Love to talk to you. You can call me anytime. The labor market is weakening. Well, is that so? Is it really happening? Well, it depends on what you want to look at, because, there's so many numbers to look at, but let's just look at a few a little bit deeper statistics. First, the last 3 months, they produced less than 200,000 jobs a month. Now, I don't know if you noticed, but when they come out and tell you what the jobs number for the first time, you think that that's the number. No, they revise them every month. They revise the previous numbers. So just let you know, under 200,000 jobs every month for the last 3 months. The unemployment rate hit an 18-month high, even though it's still pretty low. So you can argue that it's still low, right? And then finally, job openings at a 2-year low. I mean, there's reasons. There are reasons why the labor market might be weakening. That's important for the economy. Now, let's see if we can hit another caller question before we have to take a break.
Hey, Steve and Justin. It's Nick from Washington, D.C. I have a real estate question for you guys. Calling in regards to a cooperative or a co-op. The unit I'm currently renting isn't a co-op, and I've been thinking about buying a unit in my building. I don't know what a cooperative is versus owning the property outright. I've been reading it online and still can't fully grasp it. You guys are great at breaking down these topics. I was wondering if you could help me out understand this. Thank you very much. Have a good one now, guys. Bye.
Well, personally, I would not buy a co-op. I would not, because you don't have the rights that you want when you buy property. And then you got to read all the restrictions and conditions of the co-op, and you got to understand what your rights are. And a lot of people get involved in these things, and they don't. They just think it's a good idea, and they don't have a clue what could go wrong. And there's things that could go wrong in any real estate, but more so in co-ops and private REITs. Those things are very, they have much more problems in those kinds of investments where the public is not involved than not. So I'd be very, very careful about doing a co-op. I'm only tertiary aware of what a co-op is and does, but I know that you have lots of restricted rights when you own part of a co-op. So as we head into a break, let me tell you about the new video feature we are producing. It is called the InvestTalk Sector Spotlight, and it's free, just like most of all of our stuff is free, and it's free right now on YouTube. Go to an InvestTalk Sector Spotlight. You can find it. It's pretty easy on YouTube. My phone lines are open, waiting and wanting your questions, everybody. 888-99-CHART.
Steve Peasley is here and ready to take your calls live. InvestTalk, 888-99-CHART.
888-992-4278. Let's go talk to Dan in Walnut Creek. Dan.
Hi there, Steve. Thanks for taking my call today.
Thank you.
Excuse me. Hey, I've got a question on One Main Holdings, OMF. I'm not too sure how long ago, maybe about a year or so, you liked the stock. You said it had a lot of room to grow and pays a nice dividend. I'm wondering, and the numbers still look pretty good. It does have, well, I don't know if it's a lot of debt. It's got $19 billion in debt. How do you feel about this stock right now?
That's your biggest danger is the debt. Okay, they have more debt than they should be carrying for this size of company. It's a $4.7 billion company. And of course, they are one-man holdings. It provides personal loans through a network of 400 branches in 44 states. So they borrow money to lend it out. So the debt has a purpose. You know, that's what's good about the debt in this kind of business and banks is the debt makes money. Their debt makes money for them. So this is the only kind of companies that you can accept that has lots of debt, in my opinion, and it's okay. REITs are okay. Banks are okay. Lending institutions of any kind is fine. You still got to figure out how much debt they have, but this stock looks still underpriced. It's going to make $7.50 next year. It's the most money it's ever made, up 34% this year, but this year it went down 20%. So based on next year's earnings, you're looking at a 4P of 7, which is pretty inexpensive on a $39 stock and a $9.37 cash flow per share. And sales are growing. The sales are growing just like they've always, kind of slow growth, but they're still growing. Now, when will this company have a problem? Well, if we go into recession, it's not. It's really. So if you think we are going to go into a recession next year, you probably want to pick it up once it's already in. We are already in a recession. That's when you can make the most money on this kind of company. Okay, because they're never going to be huge capital appreciation for you. Never. So you kind of want to buy it low. Appreciate the call. Thank you very much. Thank you. Okay, let's go. Let's see. We go into a break, guys? Is that what I see in there? No. News. Oh, okay. The KPP Premium Newsletter was finished today and will be distributed to subscribers tomorrow morning, as we do every Saturday. In the market conditions sections, we explained U.S. stocks opened with gains today and saw the S&P 500 rise 0.4%, and the Nasdaq Composite fall 0.6%. Now up 0.6%, driven by increased demand for energy stocks due to rising crude oil prices. Also, you had that artificial intelligence news out that pushing stocks still. Anyway, Brent crude reached $90.50 a barrel today, its highest point since November. Tech stocks were on a slight rebound today as well after the ratcheting up of trade tensions between the U.S. and China, which I talked about yesterday on the show, led to a ban on iPhones to Chinese government employees. U.S. home prices rose in July after a 5-month year-over-year decline that defied expectations. They think the experts are thinking we're going to be in a housing decline, probably because interest rates are so high. As stocks slightly rallied, U.S. Treasury yields dipped on Friday as concerns mounted over the potential for further interest rate hikes, spurred by recent economic data indicating sustained inflation and a tight labor market. Concerns over higher interest rates were increased after strong U.S. service sector and labor market data came out this week. So, there's a yin and yang going on, pull and push and tug on the belief, will rates rise or stop rising? It's just hard to know. And there's, of course, a lot more in the newsletter. You just have to, purchase it, and it'll be delivered to you every Friday morning. On the stock section, stock ideas section, an American diversified metals manufacturing company focused on value-added steel processing and manufactured metal products, including pressure cylinders for liquefied petroleum gas, compressed natural gas, oxygen, refrigerant, and other industrial gases. Valuation looks attractive with a price of book of 1.98 and net income of 35%. Debt levels are pretty low with a debt equity ratio of 0.5. And we also looked at a supplier of carbon black, a solid form of carbon produced as powder or pellets. The company's operating segment on specialty carbon black and rubber carbon black. Rubber carbon black segment is used in the reinforcement of rubber in tires and mechanical and rubber goods. The stock has had a nice pullback to a current support level of $21 and is trading at a PE of 11. And with an 11% revenue growth rate, that's pretty positive. Although debt is still a little high with a debt equity ratio of 1.9, it's easy can manage the debt. Okay? You can. It's got a 4.62 interest coverage ratio. Some of these numbers are all new probably to you, but we're just trying to provide slowly more information. If you have questions about what they mean, just ask. Be happy to do it. Well, of course, in the newsletter, we're going to name the names of the stocks I'm talking about, with the symbols, so you'll know exactly who it is. So that's a sample teaser of the latest KPP Premium Newsletter. You can subscribe via email. Okay, that's how you receive it. Subscribe going to our website, InvestTalk.com or kppfinancial.com, and you will get the newsletter email. And they also get the portfolio management section and the consumer watch section. There's 4 sections altogether. Okay, let's grab another call or question, 888-99-CHART.
Hey, Steve, Justin, and Luke. This is Keith from Redondo Beach. First, happy birthday to Justin. I remember that because I share your birthday, probably 20 years before you, but we have the same birthday, 9/11. Second, question on asset allocation and market valuation. So I know you don't ever want to totally get out of the market, and I believe a primary determinant of your returns is your asset allocation, how much is in stocks versus fixed value. Question for you, is there a rule of thumb that says, hey, if I've got a 60-40 portfolio in general, and I think the market is 10% overvalued, do I change 60-40 to 50-50? And if I think the market is 10% undervalued, do I change 60-40 to maybe 70-30? Is there a rule of thumb that gives you a ratio between how far you think the market is overvalued or undervalued versus what percent you are in stocks versus fixed income? Anyway, thanks a lot, and I'll listen for your response. Bye-bye.
Well, that ratio that you were talking about, and the adjustment of that ratio, is a method to try to capture stocks when they're low price and try to sell stocks when they're high price. That's what that effort is, as far as an asset allocation model goes. And as I said many times, nothing's perfect. Everything's imperfect in our industry. How do you realize? First thing I would suggest is you got to study the relationship between the economic cycle and the stock market cycle, because they're tied together. They're not tied. One doesn't go up and the other one goes up following it. That's not what I mean. But they are tied together. In a recession, stock market has different sectors that work better. And in boom times for the economy, the stock market has sectors where that works better. So, and it's very clear. There's no mystery to it. You can type in economic cycles and the stock market in search, and you'll get all kinds of charts. You can study it yourself. It's pretty simple. But, it's difficult. You got to know what sectors are trade traditionally higher than standard PE ratios and which ones are lower, and then understand the cycles. It's difficult. It's not that simple just to say, well, if it has a PE here this low, that must mean a good stock. Not necessarily. I don't know. I have to see the previous earnings and the estimated earnings going forward, and what kind of industry is it in, that kind of stuff. There's no easy answer. That's what I'm trying to tell you. Okay, we're now in September, the last month of the third quarter, and the year is moving pretty fast. Justin Klein and I have been telling you for a while now that we are in a new market environment, because it's vastly different than it was when interest rates were always falling. Now we've been raising rates for close on to 2 years, a year and a half, a year and 3/4. So interest rates are now rising. Okay, so that changes things. That changes valuations of different sectors. So it can be hard to track all this stuff. You got to fit your thinking and strategies to the time that you're in. Okay, now if you can't do this or you want some help doing this, that's what KPP Financial is all about. We would love to help you with this. We try to practice, and we have a philosophy of independent thinking and shared success, and we try to make that practice real by providing unbiased guidance and parallel investing, in which we buy the same stocks as you do, our clients do, and the same percentages, same price in the different portfolios we have. We like to ride along with our clients, and we do that. So call our KPP offices, which are in Irvine, California. Ask for Justin or me, or anybody will sit there and talk to you. So give us a call. We want to help you if we can, but you have to take the first step. So please do so. Okay, this is InvestTalk, everybody. Now with more than 55 million downloads, thanks to you. Hang on, more questions and answers are coming up.
The prosperous future you envision for yourself and your family will not happen without strategic planning and definitive action.
Let's go to Brian in San Mateo looking at Roku.
And I wanted your take on the technical picture.
For the unprepared investor, market volatility around the world demonstrates risk, but opportunities wait for no one. And now may be the best time in years to invest wisely, to invest strategically.
What I would do is keep saving and look for other opportunities.
But how can you decide what sectors to avoid, which stocks to buy, and what might be the best price point?
I'm new to investing, and my friend Wesley recommended your podcast a year ago.
And how should you deal with your risk tolerance? InvestTalk. To prevail, serious investors need a balanced combination of realistic market education and unbiased guidance. KPP Financial Principals Steve Peasley and Justin Klein host a unique weekday finance and investment program and podcast, InvestTalk.
Hello, Justin and Steve. This is Joel calling in from Maine. I love the show. I'll be listening for your answer.
Is your asset portfolio properly balanced? How can you better manage your 401k? How will economic events affect the real estate market? So many questions. The straightforward answers can help you focus on your drive for success. You can learn more anytime at investtalk.com. The next decisive step on your path to financial freedom begins with a Spotify search for InvestTalk. Listen live or download the free podcast.
And I've got a question about warrant shares. I think that's the right term.
Got a question for Steve or Justin? 888-99-CHART.
Hi, Steve and Justin. I'm calling in with a question on the stock DocuSign. The symbol is DOCU. I currently hold some shares in both retirement account and non-retirement account. I bought it when it was around $100, and now it's down to $50. So I wanted to get your opinion on what the outlook is and whether I should continue to hold or just take a loss. I'm not going to retire, maybe not in about 5 more years. Maybe should just hold it in my retirement account because I guess I don't really want to lose that money. But anyway, just want to see what your opinion is. Thank you so much.
Okay, it's DocuSign, everybody. DOCU provides an e-signature solution that enables businesses to, dig literally, digitally, and prepare and execute signed agreements. So it lets you sign contracts, is what it does. We use it often in our office, DocuSign, and it's a very good piece of software. I'm very pleased with it. The problem you have here is it used to be a really fast-growing company, and it's no longer a fast-growing company, but it's still growing. Last quarter was 11%. Quarter before that was 12%. We're talking about sales, growth in sales. The quarter before that was 14%. But a year ago, they were in the mid-20s to the low 30s on average in growth. So it's still growing, just slowed way down. Now, forward P is 18, which is a little high for a slow growth kind of company. And I don't fall in love with the fact that it was $300 a share back in 2020, and you think it might go back to that. Chances are very slim that will happen. They're going to make $2.71. How much is $2.71 worth? Is it worth a 20 PE? Then you're talking about a $54 stock, and the stock is at 50 now. But is it worth 20 PE? Maybe it's worth 15. See, so it's a good, solid company. I don't want you to think in those terms, but you're not going to get a ton of growth back into it, I don't think, unless growth has dramatically picks up, and I don't see that happening. Anyways, this is InvestTalk. I'm Steve Peasley. We have one goal here to help you achieve financial freedom. And our work will continue after the break, so get your questions in now, 888-99-CHART.
Justin Klein and Steve Peasley are ready to take on your finance and investment questions. Call InvestTalk, 888-99-CHART.
Hey, Steve and Justin, this is Nathan from Texas. I was calling to see what your guys' view is on Dollar General. That's the symbol DG, and the sharp hit they've taken in price over the past few months. And it looks like management has downgraded their expectations for future earnings. But with this company, such a grassroots type, low-cost grocery store and convenience store across the nation, I wonder if maybe we're getting into the range where this may be a bargain, or if this is been pushed down too far, or if it's fairly priced and still has further to drop. Thanks.
Okay, I think it actually has probably further to drop based on the estimates that the management gave out. But it is a solid company. They have made money for years and years and years. The 2023 was our best year, $10.68 a share. Then last year, or this year, they're going to make $7.91. It's 25% less. Next year, they'll bounce up to $8.67. That means the forward PE is going to be about 16, and their range is 13 to 28. Return on equity is very good at 41%. Management 1%. Mutual funds have pretty much held steady. They do have some debt, but they operate 19,000 stores located in 47 states, and they plan on open 1,050 more stores. So you're going to have some debt when you're building out. I think it only pays a 1.9% dividend. It's a $28 billion company, which to me is a pretty low dividend. But I do think it's going to prevent an opportunity for you to get into this stock once it bottoms out. I just don't think it has bottomed out yet. I think you just could keep an eye on it. Where will it bottom out? Well, it's getting pretty darn close to where it should bottom out. Okay, that'd be about 120 or so. So, but I still just be patient. We'll know better in the next 30 days, 60 days, if this is putting in a bottom or not. Because the chart looks bad as we stand right now. Looks very bad. Okay, remember I talked about China yesterday and Apple and how they're restricting Apple phones and all that stuff? Well, companies that will face much larger problems in China and just as bad as Apple is facing, or worse, and most of them are all tech companies. Most of them are. Qualcomm makes like 80% of their income comes from, or was it 50? Yeah, 50-something% of their income comes from China. Texas Instrument, 49% of theirs. Broadcom, 35% of their sales come from China. Then there's Veritas, Albemarle, Corning, 30% of their sales come from China. Applied Materials, 28%, and On Semiconductor, 28%. So, if, we're not having the friendliest times with China at this point, and that's going to affect trade, and it already has. Now, the question is how much more effect is it going to have? Because pressure is really, a lot of that pressure is going to come from the Chinese side when they just can say outright, don't buy XYZ products from XYZ company. Here in the United States, you can't just ban a legal company in the United States to buy some legal products from China. You can't stop them from doing that. Now, of course, you could have, our government could put on tariffs or they can put on certain restrictions, but, China, it's pretty much a totalitarian society. Whatever they say goes, and it goes whenever they say it's going to go. They got issues. I'm Steve Peasley, everybody, and this completes another InvestTalk program. I do thank you for calling. I do thank you a little bit listening. Appreciate it. Our podcasts, our radio shows, we record them. It's all free. We record it live on our website. So, if you really want to get our podcast, you can go to iTunes, Google Play, or Spotify. Download it from them, and you can rate us on iTunes, if that's where you get it downloaded from. Remember to follow us on social media, and be sure to like and tag. This helps everyone in the InvestTalk community. Independent thinking, share success. This is InvestTalk, everybody. Have a great weekend.
InvestTalk is a trademark of KPP Financial. Because of the nature of the interactive dialogue inherent in the format of this program, it's important for the listener to understand that not all comments made will apply to them. Specifically, nothing said shall be taken to be investment advice, or shall statements on this program be considered an offer to buy or sell security. Because such advice is rendered solely on an individual basis and at times will require that the investor review a prospectus before investing. InvestTalk is a copyright